Check this out. This is the best MACD trading strategy. What I'm about to show you is, well, it's a bit different. It's not your typical MACD trading strategy, and it uses a pretty unique and insane trade signal. I'm going to show you exactly how to turn a common indicator like the MACD indicator into a high probability trade setup with a high win rate trading strategy. And most importantly, it can make you money in any market. Stocks, Forex, cryptocurrencies, you name it. If you want to learn how to consistently profit from the MACD indicator, even in choppy markets, then keep watching. Let's get straight into it. First, let's quickly cover the MACD for those who are new. So, the MACD stands for Moving Average Convergence Divergence. It's a momentum indicator, meaning it helps us see how fast the price is changing. And in just a few minutes, I'll show you how to find when the price will break into a new trend. In this video, I will share a complete guide for this brand new MACD trading strategy, but more on that later. Now, if you've been trading for a while, you probably know that most technical indicators are prone to give you false signals. So, relying solely on the basic MACD indicator signals, it's not going to blow you away on its own. Therefore, make sure you watch this whole video to see how we're going to use it in a different way. A way to get a much higher win rate. First, let's get the MACD indicator on our chart. Go to TradingView Indicators and search for the MACD indicator. It's built in, no custom script needed. All right, so we've got the MACD on the price chart. But before we move forward, let's quickly go over how the MACD works, even though we're not using all of it. Let's backtrack to put it very simply. The MACD indicator consists of three parts. The MACD line, which is typically a faster moving average with a period of 12. The signal line, which is the slower moving average and is a 26-period moving average. Lastly, the histogram simply shows the difference between these two lines. When the histogram bars are getting taller, it means that the trend is gaining strength, so we have more momentum. When they're shrinking, the trend might be slowing down, so less momentum. And when the MACD histogram bars cross the zero line, that's just another way of showing a crossover between the MACD line and the signal line. Simple, right? This is all part of technical analysis, but we'll only use the MACD histogram visually, because it's not our primary focus for this trading strategy. We won't be using the zero line either in this MACD strategy, which is a key difference from how most traders use it. Now here's where most traders fail. They only look for the standard MACD crossovers. The thing is, that's beginner level stuff. But we're not doing that. I'll show you a far more effective trading strategy to use the MACD indicator. So here's where my MACD trading strategy differs from what most traders are doing. Instead of just looking for standard MACD crossovers, we're going to focus on a very specific setup I call the MACD compression, or the squeeze. This will help you identify explosive breakout moves before they happen. This trading strategy is all about when the two moving averages, the MACD line and the signal line, get really close together, when they flatten out, when they're basically squeezing, when they are shrinking and moving almost horizontally for a period of time, when the distance between them gets tiny or even disappears. When this happens, you are usually in a range-bound market. You'll also notice that the MACD histogram shrinks to almost nothing as the distance between the two moving averages becomes very thin. Look at this area. See that? They're almost touching. Do you see how the two MACD lines are almost flat and practically touching each other? This is our MACD setup. What this means is that the price is getting ready for a breakout. It's consolidating, coiling up, and it is showing a reduction of the slope. You know, there's a powerful principle in trading that applies perfectly here. I'm going to show you exactly how this one trading wisdom can dramatically improve your trading results, and it's surprisingly simple. Now, here's something really interesting about the price action. Small trading ranges are usually followed by bigger trading ranges and vice versa. Think of it like a spring. When the price action is compressed into a tight range, it's storing energy. And when it finally breaks out, that energy gets released, often leading to a strong, sustained upward trend or downward trend. But the good news is, you don't have to guess which way it will break. And in just a minute, I'll show you how to use a simple filter to drastically increase your win rate. If you're struggling with identifying when a breakout is likely to occur, this will help you tremendously. This next tip is even more important than the last one, because it applies to all markets and time frames. The crazy thing about it was realizing how consistently this pattern repeats itself. It's almost like a hidden market law. Therefore, when we see this MACD compression or the MA squeeze in a tight range, we know that a period of increased volatility is likely coming. But here's the beauty of this MACD trading strategy. Instead of guessing or trying to predict which way the price will break, we're going to let the market show us. We wait for the breakout to happen first, and then we enter in that direction. Let me show you an example of this MACD setup right here on the chart. See how the MACD moving averages squeeze happened, and then the price broke out? That's what we're looking for. But here's the thing. We can take this MACD trading strategy and crank it up a notch. This one simple tweak can transform your win rate from good to insanely good. We can add something to help us filter out some of those false signals and determine the overall trend direction. And that's where the 100-day moving average comes into play. I've done extensive backtesting on this, and let me tell you, this one addition makes a huge difference. The crazy thing about it is how such a simple tool can have such a massive impact on your trading results. So, To add the 100-day moving average, go to your indicators again, select moving average, and set the period to 100. Once we have the moving average added, you'll have two technical indicators on the chart. Now, the 100-day moving average is a simple way to see the overall trend. If the price is above this MA line, the market is generally in an uptrend. If the price is below the 100 MA line, the market is generally in a downtrend. It's not perfect, but it helps to add more confluence to our trade ideas. Let's backtrack to put it very simply. We only want to trade breakouts in the direction of the overall market trend. The crazy thing about it was, I used to fight the trend all the time and wonder why my win rate suffered. But here's the beauty of this MACD strategy. When you align your trades with the trend, your probability of closing the trade and profit increases. If you're struggling with losing trades, this principle alone will eliminate a lot of your losing trades. I'm also going to reveal a secret for setting your stop loss, but more on that later. So if we're looking for buy or go long trades, we want the price to be above the 100-day moving average, and we want to see that MACD squeeze. Then we wait for the upward breakout. If we're looking for short trades, it's the exact opposite. We want the price to be below the 100-day moving average. We wait for the MACD squeeze to show up. Then we wait for the downward breakout. Now onto the fun stuff. Let's look at another trade example. Here we have a clear MACD squeeze forming. The lines are flat, extremely close together, and the histogram size is shrinking. And then we get our breakout upwards as the MACD line crosses above the signal line. We check our 100-day moving average and confirm the price is above it, indicating an uptrend, which confirms that this is a perfect long trade opportunity. And here we have another MACD squeeze signal, but the price is below the 100-day moving average. Even if it breaks out upwards, we wouldn't take that trade because it's against the trend. The way I knew that this was a lower probability trade was the 100-day MA. Now, for risk management, here's the plan. For stop losses, I recommend placing them beyond the most recent swing point in the opposite direction of your trade. Or, alternatively, hide your protective stop loss below the 100-day moving average. And for profit targets, I typically use a 2-to-1 reward to risk ratio. But you can adjust this based on your trading style and the specific market conditions and current price action. Now, let me show you how this MACD trading strategy performs in different market conditions. In trending markets like this one, you can see the MACD squeeze gives extremely reliable signals that align perfectly with the overall trend. In sideways markets, that's where most trading strategies fail, but the MACD squeeze pattern actually becomes even more valuable, as it helps identify when the consolidation is about to end and a new directional move is about to begin. I backtested this MACD trading strategy across multiple timeframes and markets, and it consistently delivers a win rate above 70% when combined with proper risk management. The reason it works so well is because it spots when the price action stops going sideways and finally picks a direction. In fact, I found some of the most profitable trade setups come from these exact scenarios. It's a science with a proven formula. So, as you can see, it's a pretty simple trading strategy once you break it down. It's all about the MACD squeeze, the trend, and waiting for that consolidation breakout. It is one of the best trading strategies for trading in the financial markets, and especially in the stock, forex, and cryptocurrency market. Now, this MACD strategy isn't going to win every time. There's no such thing as a perfect strategy. You will have both loss and profit, but it's a high win rate trading setup and a beginner-friendly trading strategy with good entry and exit points that can be very effective if you use it right. You might need to practice a bit to get good at spotting those MACD moving average squeezes and learning when to take the breakout trades, but once you get the hang of it, it can be a really powerful tool and will help you break through. I think this is probably the most important thing that you need to be doing if you trade the MACD indicator and that you are probably not doing, which is practicing. So, get on a chart and start looking for these trading signals. So, I just revealed to you the best MACD trading strategy. All I ask for in return is to please consider hitting that like button and subscribing to Bullish Wicks. If you want to learn more from a trader with over 18 years of trading experience, if you enjoyed this video on the MACD trading strategy, check out my next video where I break down another trading strategy. While the MACD is excellent, there is another indicator that is even more valuable, and hardly anyone is using it correctly. I will show you how to use its 50 mid level. Yes, the 50 mid level, to find big bullish and bearish displacement candles. This is something almost no one talks about, but that's not all. I'm also revealing 2 brand new trading setups, including the snake effect, that you won't find anywhere else. Click here to watch it right now.